What's going on, everyone? I'm back with another video. In today's video, we'll be talking about time frame correlation. This is a very important video, very important. Do not skip over this. This is very important when it comes to getting those good entries, those sniper entries all you guys want. Get in early on the trade before the big movement. This is very important. You will need this. It is very simple. I'm going to make it very simple for you guys because it's not complicated. So what do we already know about simple forex or simple trading, wherever you trade? What do we know about candlesticks? So the one thing we know about candlesticks when it comes to time frame correlation, the higher time frames are the big moves, or the higher time frames. Let me just reword that. The higher time frames are more complete. The lower time frames make up the higher time frames. Okay, follow me. So, for example, if I was looking at the 4-hour chart, I will see a thick green candle. That's correct. But if I drop down to the 1-hour time frame, I will see 4 candles. Why? Because these 4 candles make up this green candle. You will see something like this. How does this work? Okay, each candle represents a time frame. This one 4-hour candle is a 4-hour candle. If you're looking at the 4-hour chart, if you look at the hour chart, each candlestick is worth, each closed candlestick is a hour. If you're looking at 30-minute and so on and so on, the 15-minute, each candlestick is a 15-minute closure. 5-minute chart, same thing. So for example, how does the 1 hour and the lower time frames follow the higher time frames? This is a 4-hour time frame candle. So you have 1 hour, 2 hour, 3 hour, 4 hour. All 4 of these candles make up this one giant candle on the 4 hour. Are you following me? I'm just gonna reiterate this. The lower time frames make up the higher time frames. This is why when I showed you in the video of marking up your charts, the very first thing I told you is to always mark up on the 4 hour because it is more complete, it is cleaner, and then all the other time frames follow the higher time frames. The lower time frames follow the higher time frames. Don't mark up on the weekly or daily. That's too just don't do that. Okay? So like I said, this is a 4-hour time frame candle, and these are 1-hour time frames. These 1 hours, for these 1 hours, obviously makes up this 4-hour time frame. Are you following me? 1 hour, 1 hour, 1 hour, 1 hour. On a 15, you'll see the same thing. A bunch of 15s make up the hour. 2 15 candles make up one 30-minute candle if you're looking at the 30-minute chart, and so on and so on. And now let me take you to a live example so you guys know I'm not BSing. It's very simple and self-explanatory. Let's say we go here. I'm glad I did this earlier. I am on you see, the 4-hour time frame, the 4-hour charts. And I boxed in this one 4-hour candle. Now watch this. If I drop down to the 1 hour, I guarantee there will be 4 candlesticks in this same box that make up this one 4-hour time frame. Boom. Are you following me? Let's count. Do not lose me. This is very simple. 1, 2, 3, 4, all in the same box that I had previously just marked that one candle on a 4-hour. Let's go back to the 4-hour because I know some of you guys just may be losing me. You see this one candlestick that I highlighted and I squared up or I rectangled. This one candlestick, this one 4-hour on the 4-hour time frame. If I drop down to the 1 hour, there will be 4 candlesticks that make up this one 4-hour candlestick. Are you following me? 1, 2, 3, 4. 1 hour, 2 hour, 3 hour, 4 hour. Now watch this. Here's the beauty of it. If I drop down to the 30-minute time frame, watch this. It's the same principle. Let's do the math. One candlestick, this is the 30-minute time frame up here, top left. 30, 30, that's 60. This is 1 hour. 30, 30, this is 60. This is 2 hour. 30, 30, this is 60. This is 3 hour. 30, 30, this is 60. This is 4 hour. So these candlesticks up here, all these candlesticks, 30-minute, 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 all made up this one 4-hour candlestick. Same old, same old. If I drop down to the 5-minute, it's going to look crazy on the 5-minute, but bear with me. Ooh, I did 5 months. Hold on. Ooh. Now watch this. Since some of you guys like to scalp. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60. 1 hour. These candlesticks right here makes up 1 hour candlestick on a 1 hour time frame. This is 60. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60. 2 hours. You get the gist of what I'm talking about. It's very self-explanatory. Okay, so now we know how the lower time frames make up the higher time frames. Now you can identify the movements. You see how when I dropped down to the lower time frames, it was easy for me to spot what is price doing, because on the 4 hour it's just one thick candlestick. But on the lower time frames, guess what? It's giving me more, not rejection, but it's giving me more things to work with. Like let's say I go to the 5 minute. You see how it's giving me more structure and corrections and things to work with. Like I can find out an entry if I wanted to, instead of being like, man, I just missed a pump on the 4 hour. So let's go back. Ooh, got my charts looking ugly. Trying to see what. So now we understand that. Hope you guys been following me. This is very simple and very self-explanatory, and you can look up on the charts on yourself as well if you want to look for yourself on the charts. Ooh, this is going to be over here. So if you guys need to take a picture of this, let me just remove this. Just take a picture. But all these smaller time frames add up to the bigger time frames. I just keep have to reiterate this because I keep getting the same questions over and over and over and over. The 5 minute, if you're on the 10-minute time frame, if you drop down to the 5 minute time frame, there will be two 5 minute candles that make up that one 10-minute candle. If you own the 30-minute time frame, if you drop down to the 15, there'll be two candles that make up that 30. If you're on the 4 hour time frame, if you drop down to the 2 hour time frame, there'll be two candlesticks that make up that one 4 hour candlestick. If you are on the 4 hour time frame and you drop down to the 1 hour time frame, there'll be four candlesticks that make up that one 4 hour candlestick. Okay? All the lower time frames follow the higher time frames. That's just how it works. This is why it's super easy to get in on moves, because I'm gonna tell you, let me show you up right here a better example. Here's another example for you guys. A correction and a continuation is the only time, I repeat, you can screenshot this too. A correction and a continuation is the only time you should scale down to the lower time frames. You should not just be trading on the lower time frames just because price is moving here, 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 there. You think it's got market structure. No, don't do that. Don't lose your money. Start thinking like the house. Stop thinking like a gambler or a regular trader. Start thinking like if I was an institution, if I was a firm or anything like that, I had trillions of dollars I was trading daily in the market, would I take this trade, or am I gambling right now because I'm emotional and I'm impulsive? Start thinking like the house. Do not let the house always win. You're gonna lose, but do not let them always win. Correction and continuation is the only time you should scale down to the lower time frames. Repeat. A correction and a continuation is the only time you should scale down to the lower time frames. Why? Because you have to get your entries from there. You can't look at one thick 4 hour candlestick and be like, oh, let me get my entry here. That's not how that works. You feel me? So, for example, let me move this because I'm going to give y'all a better example of actually how it looks on the chart. So, let's say this is how the chart works. Let's say this is the hour chart, right? So, if this is the indication, the breakout of the low, here's the indication, here's the correction, right? Let's say I wanted to get in a sell or anything like that, or let's say a buy or anything like that, right? Okay, so on the 1 hour time frame, let's say I was trading on, I marked up my charts on the 4 hour, which I always do, and I scaled down to the 1 hour. We obviously know on the 1 hour, the 4 hour time frame, if this was a sell, an indication, a correction, this is what it would look like. It would probably be one large ass candlestick on the 4 hour, something like this, maybe two. Just a large candlestick, a large body candlestick going all the way down, something like this. How do we even get into this sell? We won't even sell a indication anyway, but hypothetically, this is bad. This is not bad teaching. Do not take this seriously. This is just an example of how they just time frame correlation. Do not trade a indication at all. So, like I was saying, on the 4 hour, it'll be like maybe one candlestick here, and then it'll be something like this. We'll see something. Let's clone this. On the 4 hour time frame, you'll see something like this. You guys probably seen this exact thing of this level. So price broke out here, came back for a correction, and is waiting for a continuation. On the 4 hour, you'll only see this right here. You'll probably only see like 2 or 3 candles, legitimately. But the good news is about this, if you drop down to the hour like I have it, you'll see stuff like, oops, that looks silly. You'll see multiple candles, and it will allow you to get your entries. So you'll see something like this. Mhm. Are you guys following me? Does that make sense? How only does that make sense? What I mean by time frame correlation. On the 1 hour, you will see multiple candles, multiple candlesticks that ignited this one or two move like this. On a 4 hour, you probably only see two candlesticks off this correction move right here. I mean, this indication move like this for a fact. You only see like one or two candles. It will look something like this. It'll go boom, boom. But only 1 hour, it gives you more information. You have more candlesticks. And then if you drop down below another like 30 minutes or 15, you'll see more, you have more information. The 4 hour, the higher time frames give you what prices overall is doing and wants to go. The lower time frames give you more information of how to enter and when to enter. So you just don't jump in. Because imagine if I was in this trade like this. Let's go back to this chart. Imagine if I just did this right here. Just, oh, it's blue. Oh my, it's green. Just boom. And I did this right here. That's retarded. So does that make sense to everybody? I hope this video was super simple to you guys, and you guys was like it just had like a whiplash or a aha moment or anything like that, because it is actually that simple. I'm not complicating trading because it does not need to be complicated. All these Fibonacci's, tap that, IC, all this other stuff is irrelevant. You only just simplify and make it basic for you, because the more complicated it is, the more things and indications and all this other stuff and um indicators I meant and stuff like that you need before you get to a trade, and what you need to read this, you need to know what liquidity gaps and sweeps happen. That is so irrelevant. This is all you need, honestly. All you need is just a indication, a correction, a continuation, and price levels, swing highs and swing lows. And also you need to know time frame correlations. It is very simple to follow.